What's going on, everybody? Thanks for tuning back in. If this is your first time here, welcome aboard. If you want to follow along for all things real estate investing, make sure you hit that subscribe button. First things first, I want to know how long you've lived in Austin. Are you an original like I am, born and raised here? Are you new here? Did you move down here during COVID? What brought you to the Austin area? Now, today's topic is, are we in a housing bubble? Has it crashed? All of the above. Every headline you read talks about exactly this. Now, there are a lot of reasons why I'm going to tell you that the housing isn't necessarily in a bubble or it's not going to crash, even though a lot of what we see in the news and the economy may tell you differently. Now, with a housing bubble, everybody expects it to burst and prices to go way down, tons of foreclosures, and we're not seeing that, especially in the Austin area, because Austin has a very strong job market. Now, yes, some of these companies have done layoffs, but for the most part, big businesses continue to come to Austin, such as Samsung, Oracle, a lot of Facebook, Google. Everybody's in town now. They call it the new Silicon Hills, if you will, because we're in the hill country. So, for that reason alone, I'm going to say that we are not going to see a bubble burst in the housing market. However, what we are seeing is that the housing market is stabilizing. And that is a good thing. Now, it may not be a great thing if you're a seller, but we haven't officially hit a buyer's market. We are in between, flatlined, and what we're seeing is week after week, the inventory on the MLS in the Austin area is starting to steady out at about 3.5 months. Now, in order to be a true buyer's market, it needs to be 5 to 7 months worth of inventory. So we're not there yet. And with it leveling out, it's a great opportunity for both buyers and sellers. Now, why are homes sitting on the market longer? Well, there's a number of reasons, but like I said, with the level out, what we are seeing is we're getting back to what real estate was prior to COVID. Now, a lot of agents are struggling with how to price out a home because inflation jumped up astronomically during COVID. We were seeing multiple bids, 30, 40, 50 bids sometimes on homes, and some of them were going well over 100K over the asking price. So that sends everything into this chaotic mixture, and for that reason, it's very difficult to understand the market unless you pay attention to it and do a lot of studying on it. And so keeping an eye on that and understanding those things really come into play when picking an agent who understands this market today and not 3-4 months ago. Now, homes sitting on the market for 45 to 90 days is not uncommon. That is what it used to be. And so it's explaining to you as a seller, hey, the homes are going to start sitting longer and longer, and that's okay. You will get a buyer, but it's going to take a little extra time. And it's not saying that you can't get top dollar, because we're still seeing homes get top dollar. However, it's pricing it without that inflation. And that's the important key. We're still seeing a lot of homes being priced at the very upper end of what things sold for 3-4 months ago, and that's really not a great expectation to set for you as a seller. My suggestion is to come in more at the lower end of what has been selling in that market, get that attention to your property, and then get out there, market it, hold open houses, and we are seeing a slowdown in open houses, but you're still getting some traction if you're priced right. So, next thing up is, how does it affect buyers in this market? Well, if you are a buyer right now, it is a great opportunity and not because you can get huge, massive discounts, although you can on some of these homes because they've been priced at the upper end of it, and they're dropping it down to get buyers and really getting the price back to the right price. And I think that's the key word, is hitting that right number, that right price for that neighborhood, for that market, so that you attract the buyers. It's a competitive offer, it's a good price, and people want to be in that area. So, as a buyer, now is a great time. Yes, interest rates are higher than they were during COVID. That's not to be unexpected. They're sort of teeter-tottering. They go up, they go down, they go up, they go down. But take advantage of it right now, because they're still saying the market is going to increase 5% year over year, which means that a $500,000 house is going to go up 5% next year. And so you're going to pay more if you wait. Like I said, this bubble isn't going to burst. We're in a different economy than we were in 2008 when the market crashed. And I've said it before, the market crashed because of poor financing. Let's face it, people were getting into homes that they couldn't afford at a normal percentage rate. So while banks and lenders were offering an adjustable rate mortgage, you could afford it for the first year, maybe the second year, but then once it jumped up to 6, 7, 8%, well, now you've priced yourself out by $500, $1,000 or more a month. And so that is why in 2008 we saw a crash. So, if any of this has helped, hit that subscribe button. Let me know your thoughts on the market, what it's going to do, what you think that the market's going to do here in the Austin area. Hope this helps. Y'all have a great day, and we'll see y'all soon.